Well, it's time now for business, and let's begin as ever by taking a look at the markets. Firstly, how things closed up in the United States. A slightly mixed bag at the close of play. The Nasdaq ending up half a percentage point. The S&P 500 ending just a little below the flatline. The Dow Jones a little lower than that, as you can see there. Now, as for Asia this Friday, also something of a mixed bag. The Nikkei trading down around half a percentage point. The Shanghai Composite trading down almost a full percentage point. The Hang Seng, meanwhile, in Hong Kong, up almost 0.4%. The Kospi trading a little higher than that. Well, for more, we can bring in Jamil Ahmad, Director of Investment Strategy at Naga. Jamil, how exactly should we understand what we're seeing on global markets right now?
Thank you, Haxi. So if you look at the landscape of global markets, you would think that really, with the mixed momentum of this week, they're lacking some of the fuel to the fire that we saw in November, which was a fantastic month for global markets. But I do think that part of the mixed performance is actually due to a little bit of a waiting game where we're waiting for more regulators to approve the vaccine and provide more government stimulus packages. And I think that once that starts bearing fruit, we're going to see a little bit more of a change of a positive momentum as we go into the Christmas season. It has not been a bad week for other risk assets. For example, oil price hit $50 in London for the first time since March, and emerging market assets like the South African Rand and the Mexican Peso both hit their strongest levels since that time too. So I do not think we're seeing a turn away from riskier assets in an investment portfolio, but we're just looking for some more good news to price in what really are already steep stock market valuations.
And Jamil, we've also just seen the European Central Bank's latest decision on interest rates. Tell us more.
So the ECB, they did extend the bond buying purchases, which essentially is pumping a little bit more money into the EU economy, but they stopped short of cutting the interest rates into further negative territory. And if the most important discussion point and the big secret coming out of the ECB meeting is actually that there are concerns, even if they're not unofficially providing this, about the euro exchange rate. And the euro has recently got to its strongest levels in 2.5 years. It improved again in valuation yesterday, despite the ECB acting. And I think that one of the big trends for 2021 is going to be in this post-pandemic world of central bankers in a little bit of a Cold War tactic, trying to prevent their currencies from gaining additional and further strength against the US dollar, because the US dollar is looking much weaker across the board. It's very hard to even find a contrarian that is not negative on the US dollar in 2021 moving forward. And that is a big problem for the euro. It's a big problem for the central banks, including the British pound, the Australian dollar. Essentially, all currencies are appreciating against the US dollar at a time where they might prefer a weaker currencies due to the pandemic shocks and the catastrophes we've seen economically over the past year.
And Jamil, I'm afraid we can't not mention Brexit. UK Prime Minister Boris Johnson saying that everyone, people, businesses should be prepared for a no-deal Brexit. How have the markets been digesting that news?
It's a little bit muted, but then we take into account that as we spoke last week, the British pound reached its strongest levels against the US dollar since Boris Johnson won the general election, which was ironically just 1 year ago tomorrow. And that was based on the promise to get Brexit done. Now, the most recent narrative is that Brexit is going to get done, but it's going to be done with, more likely than not at this stage, to be a no-deal Brexit trade agreement, which obviously is going to have huge implications for the UK economy, UK asset classes. So the British pound is now much closer to 130 than it was 135. And should, push come to shove, and this narrative that a no deal is better than a bad deal be something that comes to fruit on Monday morning, then we are more likely than not to see additional falls in the British pound. 130 at least we can see. But essentially, no deal Brexit is going to be a big concern for investors because it's something that's not priced into the markets.
Jamil Ahmad, thank you very much.